One of the biggest reasons people don't buy a home is because they think they need way more money than they actually do. Most people assume you need 20% down, but in many cases, that's not even close. And honestly, that belief alone keeps a lot of people stuck on the sidelines for years. In this video, I'm going to break down exactly how much you really need to buy a home in Minneapolis, where most buyers get this wrong, and what it actually looks like in today's market. Let's start with the biggest misconception. You need 20% down to buy a house. That idea has been around forever, and yes, it can be an option. But for most buyers today, especially in Minneapolis and the Twin Cities market, it's just not how people are actually buying homes. And here's the reality. If you wait until you have 20% saved, you could be waiting years longer than you actually need to. Meanwhile, home prices change, interest rates change, and you're still on the sidelines. So the better question isn't, do I have 20% down? It's, what's the smartest way for me to get into a home based on my situation? And that's where things start to shift. So what are buyers actually doing right now? In many cases, we're seeing 3% down with conventional loan options, 3.5% down with FHA loans, and sometimes even less depending on specific programs. So let's put all of this into real numbers. If you're looking at a $400,000 home in Minneapolis, most people will think, I need $80,000 saved. But in reality, you could be closer to $12,000 to $16,000 for your down payment. And that is a completely different conversation. And this is usually the moment where buyers realize, okay, this might actually be possible sooner than I thought. Now, this is where things catch people off guard. It's not the down payment, it's the closing costs. Closing costs typically run around 2% to 4% of the purchase price. So on that same $400,000 home, you might be looking at $8,000 to $16,000 in closing costs. And a lot of buyers don't fully account for this up front. So what happens? They save for their down payment, but then realize there are additional costs they didn't plan for. And that's where having a clear plan early becomes really important. So when you combine everything, down payment and closing costs, a realistic range for many buyers ends up being around $20,000 to $30,000 total, and sometimes less, depending on strategy. Now, this isn't a one-size-fits-all number, but it gives you a much more realistic starting point compared to that 20% myth. Here's where it gets interesting. There are ways buyers reduce how much they actually bring to the table. For example, negotiating seller-paid closing costs, using specific loan programs, and first-time buyer assistance programs. So instead of covering everything out of pocket, you can structure the deal in a way that reduces your upfront costs. And this is where strategy matters, because two buyers looking at the exact same home can end up bringing very different amounts of cash depending on how the deal is structured. Now, earlier we talked about upfront costs, but what really matters long-term is this, your monthly payment. Because even if you can buy, the real question is, does this actually fit your lifestyle comfortably? So instead of asking, how much do I need saved, start asking, what's the minimum I need to get in, and what monthly payment works for me? That is how we've guided our clients since day one. Let's say someone is comfortable at $2,500 a month. That number, more than anything else, is what should guide your price range, your loan structure, and your overall strategy, not just how much you have saved. If you're curious what this actually looks like for your situation, price range, monthly payment, and total cash needed, reach out. I can break it down for you pretty simply. And if you're trying to figure out whether buying even makes sense right now, that's exactly what I break down in the next video.